I have both positive and negative news on CCIV. The good news is most of us content creators misunderstood the CCIV merger valuation, including myself. The bad news is we have negative manufacturing news. In addition, Peter Rawlinson was live on CNBC today before the market opened. I will play all these highlights from today's live stream. You don't want to miss this video. Make sure to stick around until the end. Before I start with the news, let's look at some meaningful numbers. For those of you with diamond hands, stay steady, my friends. Today's short volume ratio is at 18%. Looks like everyone cashed out. I expect for CCIV to stabilize between $30 and $40 in the short term. As for the institutional buying, nothing has changed. Things are still looking strong and steady as far as institutional buying and short interest goes. The $24 billion valuation, how that is why there was a sell-off, but we all got it wrong. I didn't see anybody getting it right. And so what basically happened is, if we took a look at this article from Bloomberg, in this Bloomberg article, it states that Lucid Motors agrees to go public with a $24 billion valuation. And everybody freaked out because typically the valuation is based out of a $10 SPAC pipe deal, and they were stating that it was going to be a $12 billion or a $15 billion valuation, and then they came out with this $24 billion valuation. I think we were all very excited and shocked, and we saw a massive sell-off, and we in social media overlooked the details because this has never been done before. If you look and you read in the article, the placement sold at a $15 a share or a 50% premium to Churchill's net asset value, which translates into $24 billion. The combined company has a transaction equity value of $11.8 billion. So we all missed this. We misread this information. So it's not as bad as we thought it was, but markets are very bearish right now. I want to just give a shout out to Stock Alerts and Stock Talk Weekly, and they pretty much broke down the actual valuation. So if we compare Lucid Motors with this valuation here, we're actually back to a $60 a share compared to NEO. So on my last YouTube video, when I went over this, we were all really upset because we saw a downturn, and we thought it was based off of $24 billion valuation at $10 a share. The reality is it was a $24 billion valuation at $15 a share. And that's something that we all missed here. So this is incorrect here. My projection here is incorrect. And I saw a lot of YouTube channels with, millions of subscribers and hundreds of thousands of subscribers, a lot bigger than my channel, that also had it wrong. Like, we all had this wrong. We all read this wrong. We didn't read the details because this has never been been seen before, and we never seen a valuation based off of $15 a share. Since the stock ran up so much, that was going to be a great deal for pipe investors at $10 a share. So they had to raise the valuation to $15 a share. So thank you, Stock Talk Weekly and Stock Alerts, for that. Also, Benzinga. If we look at Benzinga here, give me 1 second. If we look at Benzinga here, Benzinga had it right when they released this. They put Lucid Motors to go public and merger with Churchill Capital 4 and 11.75 billion equity value CCIV. So the way that Bloomberg stated this article was weird with the headline. So the article wasn't wrong. It's just that the way that the headlines read was a little confusing. So we're still not bad here. We're still somewhat bullish if you're holding CCIV. I'm still holding my shares. I mean, I got it at a good price. And, in the meantime, we're going to see a lot of turbulence. This is expected.
And the money came roaring back to growth. So what I'm advising people is to say, let's stay the course. Make sure you have some of the Marriotts. Make sure you have some of the Southwests. Make sure you have some of the Disneys. But don't forget, this period will end, but we're at the beginning of it. And I think that today, David, today is such an important day. Why? Because today is a day where we discovered, I think there was some lucidity that came to the market.
There was. We got some. Yes, we got a clear sense as to value, at least as it is viewed on behalf of those who are making a pipe investment in Churchill Capital 4, or Lucid Motors now, which is what it will become. And overall, we got a sense, to your point, as to just how large this company is on a market cap basis. Let me go through it, because we've been watching this for quite some time. I mean, this was sort of the GME of Twitter, if you'd like, if you watch the Twitter stream on CCIV.
I did a spit take.
Yeah.
I did a Danny Thomas spit take.
Well, it's true, right? I mean, I mean, you and I both, I certainly came in for a great deal of criticism, because 10 weeks ago I said that it wasn't necessarily a done deal, which of course it wasn't at the time. But learned a lot since then, and certainly the enthusiasm of those in this stock has been undiminished. But they finally got the deal. Right. And now we know that there are going to be 1.6 billion shares outstanding. The PIPE investors who invested at $15 a share, all right, there's one value for them. Let's call it a 24 billion or so. And then you've got a roughly, still based on this current stock price, 1.6 billion times 37. Where does that get you? Close to 60 billion, right? Right. Last night, before the close, the company was valued at, let's call it closer to $100 billion. 95, 100 billion, bigger than GM, bigger than Ford, as we know. But we do now have a sense as to what it's worth. Now, that said, we're going to talk, Carl, a lot to Mr. Rawlinson about the views of the future. They will, of course, say that they trade an enterprise value over revenue that is far below that of Tesla, not to mention NIO and a number of other big consumer EV names. The car itself looks beautiful, but Jim, we did get, to your point, some lucidity when it came to Lucid. The deal has been announced, of course, at this point. The PIPE investors have to be very lucky. You wonder how many will hang around once they're able to sell, given they got in at 15 for something that's still trading at more than twice that.
David, I thought I was in some sort of history lesson with my Twitter feed, because I kept reading about Churchill. And I was waiting, we will fight on the beaches, we will fight on here. No, we're fighting right now about a $50 billion value. There's going to be $100 billion with the Bloomberg leak. $100 billion, David, is a lot of billions.
It's a lot.
And you know, Churchill, okay? A great man. Churchill, the stock, now we find out that when you buy a SPAC late in the game, you don't necessarily make money.
No, but you know what? The enthusiasm for this name, I had a number of conversations late yesterday with some hedge fund managers, as you might anticipate, who were thinking, well, maybe it's time. Maybe now that the deal is at hand, it's time to short it. But who would, Jim? You never know.
No.
You could have argued this morning that there would have been even more enthusiasm. That, okay, 90, 100 billion is right, or maybe it's even worth more, given what they're looking for, what's the number? In terms of EBITDA projections, and we'll get to all this with Rawlinson, but it was 2.8 billion. I don't have the slide here in front of me. 2.8 billion in EBITDA in 2026, I think, is right. I'll get that slide for us as well.
But David, that's
a big number.
That page is beautiful. The 2023 EV over slash revenue.
Yes.
It's the cheap, David. It's so cheap versus NIO. I mean, how can you not be in it?
And versus Tesla, they would tell you as well.
Yes. Carl, this is one of the most exciting
Tesla,
days.
which
It's very
Tesla.
early.
Yeah, we haven't even mentioned yet the Tesla's red for the year, actually below its S&P entry price this morning. Guys, we'll take a break. We'll talk to Rawlinson from Lucid after this commercial. We'll get to some of the earnings, of course, from Home Depot and Macy's. Got upgrades of Texan, downgrades of Spotify. Back in a moment.
That will have roughly a $60 billion market value. Does that make you nervous? Do you feel like you can deliver on that kind of expectation in the marketplace?
I think that the great news is that Lucid's a tech company, and we're bringing the world's best technology to the market this year here in the US. And I think that the valuation is a reflection of our technology. I think that has been validated and endorsed through the due diligence that Churchill Capital have undertaken. And they're thrilled with the product, everything they've seen. I'm very confident we've got world-class tech. What we need to do now is humbly and diligently execute and get this into production. And that is what will truly drive the value.
Yes, it will. And it is behind some of the numbers that you're putting out there. And let me just share some of them, because they're impressive. You are looking for generating as much as $2.885 billion in EBITDA by 2026. So within the next 5 years. What gives you the confidence, Peter, that you can ramp up production, and sales, obviously, to the point where you're going to be able to deliver on that kind of a target?
Well, I think we've got an ambitious yet realizable plan. We've shown that we can execute. If you look at the factory that we've built to date, we did that in record time, the first greenfield, purpose-built EV factory in North America. So the team I've got and surrounded myself with are consummate professionals, and we've got the expertise, we've got the track record of delivery. What's really important now, though, particularly over the next few months, is to get our first product into production. That's the great litmus.
Okay, so Peter, you say you're a technology company, and I share that. And on page 37 of your excellent deck that has everything that people should know, leading charging speeds. I happen to think that the differential for many, many people and many, many cars is how quick you can get on the road and how quick you can charge. Give us what you can do versus the other guys.
Absolutely, Jim. I couldn't agree more. It's a huge differential. So here we have a charging speed where we can put 300 miles in the car in around 20 minutes. And we're doing that with ultra high voltage, over 900 volt charging through our partnership with Electrify America. This is next generation technology, and we're doing that with our Wonderbox boost charger. And not only that, we've got two-way charging on board, so we can actually go vehicle to grid. You can run your house off the car.
Well, I also like, as someone who has kids who drive, I see that you have 32 sensors on board, a comprehensive sensor suite. I always ask my kids, how many sensors? Why? Because this is what a parent cares about. This is the most, correct? This is maybe the safest car on the road.
To the best of my knowledge, it's the most comprehensive and beautifully integrated sensor suite for autonomous driving and ADAS. Over 14 cameras, 32 sensors, and we fuse long and short range radar, surround radar with long range, plus a 120-degree solid-state LiDAR in the nose.
So, Peter, one of the things I think our viewers, they're so excited. They wanted a piece. They bought Churchill. When you try to figure out a price, did you say, listen, you know what, we're every bit as good as Tesla, if not better, but we're priced underneath Tesla, so therefore anyone who thinks that this is overpriced as a stock is missing the big point, which is we have more technology, we have faster charging, we got a better car, and we're cheaper than the stock of Tesla.
Well, I think there's a gross misunderstanding on the market, actually, Jim, because actually the price, the acquisition price of Lucid from Churchill was $11.75 billion. That was a snip. It was a great deal for Churchill, but there was a quid pro quo. Churchill brought this incredible array of the bluest of blue chip companies to invest in us, with long-term commitment, with a lockup and a commitment. And those companies provided, we were oversubscribed for the pipe. So we actually expanded the pipe, and the pipe sold at $15. And this is unprecedented in the history of SPACs. So this is why I'm so buoyed that so many of these savvy investors, blue chip companies, could see the long-term value potential, and that lies in Lucid's technology.
Yeah, and Peter, I mean, to that point, you did sell 16% of the company to CCIV shareholders. And to your point, the pipe holders will own about 10% at 15, which is 50% more than those who invested originally in the SPAC at 10 have paid. But that said, you still sold 26% of the company at a discounted value. When I say that, I mention it because you might have just gone public the traditional way. There seemed to be great enthusiasm for your stock and your product. Why did you still choose to go this way?
I think that this has enabled us to secure our future. We've raised over $4.5 billion. This means that we can accelerate our business model and in a secure manner. And this is really important because the whole world needs to move to sustainable mobility with technology. And this means that Lucid can be at the forefront of this new movement. The world cannot wait. This has given us security, commitment from long-term investors, and we've been augmented as a company by the illustrious roster of luminaries that Churchill Capital has assembled, which provides a whole new dynamic and dimension as we grow the business going forward.
Yeah, well, growth is, of course, what everybody's going to be focused on. You say by 2030, you anticipate run rate production of more than 500,000 units. That would represent roughly 4% market share of a 2030 TAM of 15 million overall units. It doesn't appear to be too much of a reach, I guess, in some ways, but at the same time, aren't you going to get significant competition from the likes of high-end automobile makers who move into EV in a very significant way? And here we're thinking, for example, of Porsche and many others, Audi, on and on.
Now, that question's been posed many times over the last decade, and that was the question that was posed of Tesla's run. They haven't come anytime soon. I mean, only last week we learned that Jaguar had cancelled their new XJ electric vehicle program. You know, as far as I'm concerned, we have to take a preeminent position. This is a tech race, and I believe only two companies realize that and recognize that. Tesla recognizes it. That's led to their preeminent position. Lucid recognizes it. We welcome the competition. Bring it on. I can't wait for Mercedes to launch EQS and for that to be head-to-head against Lucid Air. We welcome that competition. Everybody wins. The planet, the customers. You win.
Peter, there's another page in your deck, and again, I'm urging people to understand the deck. Why? Because Churchill, the stock, it may be confusing to people, but Lucid, the company, 19 top execs, 8 went to work from Tesla, 3 from Apple. This is a technology company. What do the Apple people add to the Tesla people to make it so that you've got the technology of the future car?
Well, that's an easy one. The car is a computer on wheels. This is a fusion of art and science and hardware and software. We've got the best of the best. And Lucid's becoming a mecca for talent, for top scientists, designers, and lead. We've got fusion of Apple executives with Tesla executives. These are the two worlds that make the new modern era of automobiles. It's a computer on wheels, but it's still a car. We're a tech company and a car company.
It's a computer on wheels, but it still needs to plug in somewhere to actually get its energy. I mean, is the infrastructure going to be there, Peter, to support what you need in terms of people being able to find the places they need to charge their cars in the 20 minutes or so that you say it will take?
Absolutely. The infrastructure is already in place. Electricity is everywhere. Most charging is done overnight in one's garage. Level 2, a charger. And with our Wonderbox technology, we can charge the car at nearly 90 miles per hour at home. That's a game changer. That's when most charging is done. And then we've got the great partnership with Electrify America, which is growing exponentially. So we can have this 1,000 volt up to 350 kilowatt capacity. But it's the 90 miles, nearly 90 miles in 1 hour at home charging level 2, which I think is a game changer.
Yeah. Back to the balance sheet for a moment. You're going to be free cash flow positive, you say, in 2025 is what I see here.
Yes.
Between now and then, obviously, significant losses. Are you going to need to raise more money beyond the $4.5 billion you currently have on your balance sheet?
Absolutely, because this is a capital-intensive business. Our balance sheet will secure our runway into 2023. We'll have built out phase 2 of the factory that we can get the economy of scale ready for the launch of Project Gravity. We'll have Gravity very close to production. This secures our future for a very long runway. But this is capital intensive, and I'll tell you why. Because there is no substitute for vertical integration. Tesla recognizes this. We cannot outsource or entrust manufacturing to a third party. It is too critical to our very existence. Nor can we entrust the precious relationship with our customers. And so the sales and service network, and I'm here in our Beverly Hills studio this morning. This isn't a virtual background, this is real, and this is the customer experience. We need to invest in these. They're asset heavy, but we can be asset light with our relationship with Electrify America. We don't have the capital burden that Tesla has encountered with rolling out its supercharged network, although I applaud them for doing it.
Peter, David Faber has introduced us to a number of battery companies, including QuantumScape, which has been one of the most exciting companies. And yet here I am looking at Lucid's single-piece brick injection molded battery, and you're talking about the ability to manufacture millions of units? That's a game changer.
Yes. I think it is. It's truly designed for mass production in a way that others haven't. When I look at the current products that are out there, frankly, they look like science projects that have been industrialized. What we've done is create design for manufacturing, and it applies to all our electric powertrain. And what you've seen, the picture you've seen, is a single shot plastic injection molding where all those elements, those electrical contactors, those bus bars, are encapsulated as the plastic flows, and that pops out of the mold. It's a single shot deal. That's revolutionary. That's like a Lego brick.
Peter, soon enough, I think Jim and I and Carl maybe want to get a ride, want to test drive that Lucid Air. So, and hopefully we'll be able to do that in person with you at some point.
That's a date. I will personally bring one round, and you must drive and experience. Driving is believing.
All right. Well, we will be watching closely. Always appreciate your joining us. And again, congrats on getting to the finish line with Churchill Capital 4. Peter Rawlinson, the CEO of Lucid.
Thank you so much.
Deal. And retail traders have been all over it. Yesterday, apparently, CCIV shares fell 30% in the after-hours trade after the news was confirmed.
Well, it's good and it's bad. It's good because what this means is, and you look at the valuation of Tesla and many of the other automotive EV-related stocks that have done this route, is that there is a ton of capital willing to invest in the electrification of the automotive sector. And when you look at that from a sustainability perspective, that's great, because it means that with more capital, we can roll out the infrastructure that's needed to make EVs take off sooner. That's good. The bad side of this is that none of this, none of the valuations being paid bear any remote resemblance to reality whatsoever. And this, what you're really doing is that when Tesla, the narrative drives up.
Richard, you mentioned Tesla, which is valued at $750 billion. If Lucid can produce 300,000 cars a year, don't they deserve more than 24?
Well, I would actually take issue with that. Should you really value Lucid against Tesla? Because is there anyone in their right mind who will actually say that Tesla is undervalued? Tesla is a narrative story. It's being driven by a narrative, and it bears no resemblance to fundamentals. I would ask the question like this. Lucid is a luxury, brand-driven vehicle maker. Should it be worth more than Ferrari, which is currently valued at 28 billion euros, arguably one of the best known and most desirable luxury vehicle brands in the world?
But they only produce 9,000 cars a year, right? 10,000 cars a year. Ferrari's not doing 300,000 units.
No, I'm with you. And I would agree. If they can produce a vast number of units that would actually bring the revenue multiples and the profit multiples down to what one would consider a good level, then yes, definitely worth more than $24 billion. But should you pay $24 billion for a company that hasn't even shipped a vehicle yet? That would be my question.
Okay, so in the video, he basically confirms the SPAC deal, where it was not as bad as people thought, but it's also obviously going into before the merger. We knew CCIV was overvalued, but again, Tesla is, and everything else is, and institutions and everyone just piles into the opportunity where the fundamentals don't really matter. So, I mean, they covered a great deal amount of what is really happening, and they're spot on. I mean, they're both spot on.
AMC, let's talk Lucid Motors and more. The Saudi-backed EV maker, which is agreeing to go public through a reverse merger, the SPACs, with Michael Klein's special acquisition company. Now, the shares of that flagship company have completely slumped. It was down at 48% at one point today because of a delay in Lucid bringing its car to market. Now, as part of the deal, Lucid unveiled that productions of its debut luxury EV would be put on hold until an unspecified date in the second quarter. CEO Peter Rawlinson spoke with our very own Ed Ludlow about that decision, and Ed joins us now from San Francisco with the story. It seems as though he's saying because of the SPAC, they've delayed the production, right?
Yes, what Rawlinson told me was that Michael Klein, former Citigroup financier, and Alan Mulally, former Ford savior, Boeing executive, as part of their due diligence with Lucid, took a look at it and told him to put things on hold. They were aiming for deliveries in the spring or the second quarter, which meant they would have had to get production already underway. And what they said was, don't go through the same quality issues that Tesla went through. Put things on hold. Don't put pressure on yourself, according to Peter Rawlinson. And for that reason, Lucid has taken the decision to say that production will start sometime in the second half of this year, but with no set target date.
And so when we sort of talk about, I guess, what the goal is here, is the goal squarely Tesla? Is that sort of what they have their mark on, or are they looking to do something maybe a little bit different?
Yeah, it's interesting because the price point of their vehicle at $169,000 is very high.
Wait, how much?
Peter, $169,000 to start. They do plan more affordable models.
Okay, I hope so.
But Peter Rawlinson, I've spoken to him a lot of times over the last 2 years. 50% of the time he says, we're not a Tesla competitor. The other 50% of the time they say, but our car's technology is better than Tesla's. You know, in the first instance, they're targeting this higher price point. They want to go after owners of European sedans like Mercedes S-Class. But ultimately, at the end of the day, the direct comparison is there, partly because Rawlinson used to be the chief engineer on Tesla's Model S. You know, Elon Musk has tweeted about Peter Rawlinson saying he left Tesla in the lurch when he left the company in 2012. So there is some interesting background there.
Ed, I'm curious what you make and really what the CEO is making of some of the market reaction and SPACs in general today.
Yeah, it's interesting. He said he wasn't concerned by the volatility. It's interesting because Peter Rawlinson told me about a year ago that investors should be cautious about EV companies and the volatility in markets, particularly driven by SPACs. But ultimately, Lucid decided to go down that route. This is what he had to say about why Lucid went public with a SPAC.
That process is enabling us to accelerate our growth. We've got a fantastic injection of cash. We've got long-term security. We've been able to attract the bluest of blue chip companies to make long-term investments in us. And I just see the SPAC as just a useful tool now to achieve that.
You know, nevertheless, money doesn't solve all problems, right? And they are putting production on hold. And it was one of the reasons the stock was lower. There was so much anticipation that we might actually see their cars on the road this year, but now that's in doubt. And they, you know, without a real product, a real tangible thing, it's hard to keep driving that narrative with investors, right?
I'm really interested as to what people are saying about who's getting hurt at the moment, Ed, because many are pointing to the fact that the people who are getting late into the deal of the SPAC is the retail investor. How do the chips fall right now when we have a share price plunge such as this?
Yeah, the thing about a SPAC, right, is that it allows the company, the EV company or the target company, to market financial projections, not actual financials, because all of these companies, or most of them, are pre-revenue. And with all the volatility that we've seen since the start of the year, it's been summed up very well by our Bloomberg Opinion colleagues. You know, they didn't get a chance to look under the hood until the deal was announced and the investor deck came out last night. When the investor deck came out last night, beyond just the disappointment of production being on hold, there's a serious level of cash burn coming from Lucid and a long time to wait until there's meaningful revenue and profit. And that is the story of all EV makers. You know, going the SPAC route does not make you unique or non-susceptible to the things that all EV makers are trying to deal with right now.
All right, Bloomberg's Ed Ludlow, great interview there on Lucid Motors. Of course, all eyes have really been on that now for the past few weeks. It'll be interesting to see what happens there. Let's get a broader look here at what's going on in the markets as we get ready to count you down to the close. Heading towards the final hour of trading. Weakness once again here in the broader equity markets. Tech stocks, those are your declines.
I don't know if you guys caught that. We got more negative news. This is actually bad. They're blaming the SPAC deal for not being able to deliver any cars this year. So they're delaying manufacturing and production. They're probably having some problems, obviously, producing EV vehicles at $169,000 retail price target. It's not going to be an easy task. And if they're going to be charging $169,000 dollars for their car. These cars better be perfect. So as you can see, now they're blaming the delays on the SPAC, which, you know, the SPAC deal should be totally different from their manufacturing. I mean, they have different management groups and authorities to handle individual parts of the business. I mean, I don't know what the SPAC has to do with this manufacturing. Regardless, this is what they're stating. I'm not sure if they are going to deliver anything by the end of the year. Based on what this gentleman said, it seems like they're not going to deliver any cars this year. I'm not sure. We have to wait and see, as you know, as time goes on throughout the year, and see what happens. So this was actually not good news. So we have a lot of bad news. This stock will still hold its value. It's still a promising investment. A lot of the new EV companies don't even have manufacturing capabilities. So Lucid Motors, even though if they don't deliver this year, they have an infrastructure where they can produce vehicles, and they're set up to produce 400,000 vehicles per year in their facilities in Arizona. So this is not going to happen anytime soon, but they have the infrastructure where a lot of the EV companies that we're seeing that are merging through a SPAC right now, they have no production capabilities. They're seeking manufacturing, and they have a lot of logistic problems. Now, Lucid seems like they're having a lot of logistic problems, but they have the manufacturing capabilities, and now they'll be in the markets. So we're seeing some delays and more negative news. This is something that I was not aware of. This was just new to me, coming from Bloomberg. So they're stating that they will probably not be delivering any cars this year. All right, that was a good interview. I just opened my new store. If you would like to support this channel, take a look and pick up a t-shirt. Click on the link under the description to go to my store. That's pretty much it for this video. If you liked this video or found this information useful, click the like button, subscribe to the channel, and click the notification bell to see more trading and investing ideas. I'm not a financial advisor, and this is for entertainment purposes only. And as always, timing is everything. Get notified so that you don't miss an opportunity.